Welcome to the Alternative Investor. A study by Schroders found that 67% of South African institutional investors intend to continue to diversify into alternatives and private markets and reduce their listed exposures. This is significantly higher than the global average of 47% found in the same survey. The Schroders Institutional Investor Study 2021 asked 750 investors in 26 locations with a total of 415 trillion rand in assets. For more, we're joined by Tim Boole, who is the head of product market private equity at Schroders Capital. Tim, thank you so much for your time. Let's talk about the highlights of this particular study. What stood out for you?
Sure, no, thank you very much. I think what stood out was really this is a very much of a global shift into private assets. I think institutional investors, have initially they saw private markets as a bit of a diversification for their own portfolios. Increasingly, they see, private markets, they're looking to diversify within private markets. So this shift in terms of their portfolios to private markets is something we saw across 90% of the investors that we interviewed.
Right. So it's quite interesting, especially when you look at what's happening with SA institutional investors. The study saying 67% of them are looking to diversify into alternatives and private markets versus that global average. And I'm curious to know what's driving this move into alternatives and private assets. And perhaps let's look back at what's been going on in the listed space.
Sure. So I think you have a number of dynamics, and I think maybe what may explain that difference between South Africa and elsewhere is partly regulatory, and regulations are changing constantly, and that's also allowing institutional investors to increasingly access various private markets. And I think, not only is there a push factor, so institutions looking to invest, but also there's a pull factor because, there is increasing means for institutional investors to access private markets by new asset classes effectively becoming available within the global capital markets. So I think there's very much of this this two-way sort of drive, this push, this pull factor that is increasing access to private investments by institutional investors. And I think when you compare that to the listed space now, of course, institutional investors have long relied upon listed securities and listed markets to provide the returns for their portfolios, and they continue to be a main part of institutional investors' portfolios. I think what has been interesting over the last couple of years, obviously, with the backdrop of a very sort of volatile sort of situation in economically, but also from a from a society point of view as well, is that you've had very different experiences. For example, the Nasdaq is 50% up compared to where it was in March 2020. Where you compare that with the FTSE 100, which is effectively level now with where it was in March 2020. And then you compare that with the Hang Seng in Hong Kong, which is effectively, it's come down, it's now in bear territory since last summer. So the listed markets are experiencing their own sort of gyrations and volatility. And in that sense, I think private markets have also provided almost a little bit of a sort of, may I say, a refuge for some institutional investors looking for slightly less volatility and access to asset classes which may be slightly less correlated with the global markets.
Which areas within alternative assets are attracting the most capital?
Well, private equity continues to dominate. So private equity is one of the largest asset classes, and that has continued to see strong inflows from institutional investors. Areas of focus have tended to be venture capital and growth investing, but the large buyout space has also attracted a lot of inflows. Other areas, infrastructure equity, very sort of an area which is increasingly rising up a lot of institutional investors, especially with the need by many governments to invest in their infrastructure, either to support the decarbonization of the energy delivery systems or to support the overall sort of shift towards a greater more sustainable economy. The one other class I would say, and this is perhaps more of a sort of a broader sort of umbrella sort of term, is a demand for impact or sustainable strategies across all asset classes. And we see that, I think the survey also highlighted that almost half of investments into private assets, ESG plays a very strong factor in terms of that decision process.
Right. What do you see being the main themes for 2022, especially for long-term orientated investors?
So in Schroders Capital, we describe it as private markets 4.0, and for that we say that we believe there are kind of four factors which are really driving this and the outlook for 2022. One is what we would say is kind of the desire for higher returns. And we attribute that to something called the complexity premium. And the complexity premium is really about making sure that investors are able to benefit from the higher returns which is possible within private markets on account of many of the inefficiencies, whether it's from sourcing investments in specialist sectors or looking for kind of structure, the way that is structured, also on the exit as well. So we call that kind of the complexity premium is layer number one. Layer number two is the diversification, and we think that's very important for institutional investors to make sure that their portfolio is not just a case of having diversifying it by making an allocation to private markets, but diversification within their private market allocation. So that means not just looking at a single asset class types or sub-asset class types, but looking at it across their whole portfolio. The other aspect is sustainability, and as I said before, that's an increasingly important factor for investors. Previously, it was more a case of just making sure that investments were ESG integrated, and now they're looking for the next level. So making sure that the investments are actually have a sustainability objective behind them. And then finally, I think there's also this democratization of private assets, and this is perhaps less relevant to institutional investors, but it's certainly a phenomenon that we see impacting private markets investing, and that is increasing demand from high net worth investors, from mass affluent investors, to also be able to access private markets, and that's possible through the innovation that's taking place within this market.
Tim, thank you so much for your time. That is Tim Boole, who is the head of product management for private equity at Schroders Capital. That is it from me. We have your weather.